Thank you guys for joining us today in this webinar series of Cash Flow Champs. It's our intention to bring you good content on a weekly basis and to develop good relationship with you and also to be a resource for you in the multifamily real estate space. So the topic we'll be covering today is due diligence for multifamily syndication. So in this webinar, we will cover a few topics here. We'll go over what is due diligence, why an intensive due diligence process is important in the multifamily syndication space. We will also touch on the different type of due diligence and certainly how to use that information from the due diligence that we have acquired. So, but first, let me take a second just to go over who I am. For those who don't know me, I am Paul Sr. I'm one of the managing partners at Cash Flow Champs, and I've been in the real estate business for about 20 years overall. It started in the single family space, and now I'm in the multifamily space for about the last 4 years. I live in Washington, D.C., right outside Washington, D.C., in Prince George's County with my wife and children. And I am also co-host of the Cash Flow Champs Real Estate Podcast with my partner, Prashant Kumar. We want to provide information to you on a weekly basis, and that's why we do these webinars. Our portfolio run right now, actually, we just closed on 2 deals, so that 146 is more like $186 million in asset under management at this point in time. And so we want to be a resource for you in this space. And some resources that we have one is a free underwriting session that we do on Saturdays with Charles Seaman. And he does that every Saturday at 4 p.m. where he goes through the teeth of the rent roll and he dissects those underwriting, dissect those deals so people can understand the underwriting so they can make good decision. And we also have the Cash Flow Champs Aristocrat Coaching Program, which is a coaching program that helps students to get in their first deal, or if they have been doing deals before, then they can definitely increase the number of deals that they do and also do it the right way. So if you're interested in the underwriting session, just scan the QR code in the middle of the screen. Or if you're interested in the coaching program, then you can do the one to the far right of your screen, and you can always connect with us using the other QR code as well. This is a disclaimer. Our attorney wants us to do this. So I'm not an attorney, financial advisor, tax advisor, accountant. So if you need those services, you want to seek the help of those professionals who offer those services. So this is just for informational purposes. So again, we're going to touch on the topic of due diligence in multifamily syndication in this webinar. We're going to go over what is due diligence, why an intensive due diligence process is important. There's a different type of due diligence in the multifamily syndication space, and really how to use that information when you actually complete a due diligence. So really by definition in the multifamily space, in the context of the multifamily space, due diligence just refers to the comprehensive process of just investigating and assessing various aspects of the property before you purchase the property. Due diligence is primarily the responsibility of the buyer, okay? So due diligence takes place during the acquisition of the property. So the purpose of the due diligence is to evaluate the various aspects of the property with the goal of limiting or mitigating the risk associated with the acquisition, right? So the risk associated can be a financial risk, it can be a physical risk, it can be an environmental risk, a regulatory risk, or even a legal risk. So we'll go through those different aspects as we get on more into the presentation. But during the due diligence, you'll be working alongside various other professionals who will be assisting you. For example, your title company will ensure that the property is free and clear of any type of liens or encumbrances or encroachments on the property before you actually purchase that property. You want to make sure that you're buying a property that is free and clear of all those type of defects, and we'll touch on that in the legal due diligence some more. So they will make sure that you have clean and clear title for ownership. So it is important that the buyer takes the time to adequately inspect the property to discover any type of latent or hidden defects. The buyer really should aim to mitigate just financial risk and environmental risk and regulatory risk in general, right? So the due diligence is a time to help to determine if what you intended to buy really is what's being sold to you, right? So are you getting what you bargained for? So that's the due diligence period. Once you get your LOI accepted, once you get on the contract, then your due diligence normally start there. You normally have about 30 days to do your overall due diligence. And sometimes you can get your due diligence started during the LOI phase, the letter of intent phase, once you get that signed off on. But in most cases, and that's called early entry, right? And then you got to get permission to do that. But typically you get in there and start your due diligence once you get your PSA, which is your purchase and sale agreement signed. So an intensive due diligence is important for the buyer to perform because it provides the buyer with added negotiation power and also added leverage, right? Because if you go in there and you determine something to be defective, then you can use that as a leverage point in terms of negotiating with the seller. Now, the seller can be asked to totally correct the defects that you find, or the seller can be asked to provide some type of a compensation to correct the defect, right? So on multifamily property, depending on the defect, this can run into tens of thousands of dollars. So we want to make sure that what we're negotiating and what we promised in terms of the property, we do the due diligence to make sure that there are no hidden defects there. And if there are, then we find a route where we can either get that corrected or get some compensation for that. So there are different types of due diligence. One is the physical due diligence. We'll all are very familiar with that. They also have financial due diligence and legal due diligence when you are actually looking into these multifamily properties as well. So in the physical due diligence, really here, the buyer of the apartment complex, they will employ the services of a professional property management company. And typically, this inspection time frame is scheduled and it's also coordinated with the seller of the property. So they work in tandem in terms of making that happen, because these physical inspections can last anywhere from 2 to 5 days, just depending on the size of the property, right? And so if you're dealing with a complex like a 200 plus unit complex, you're probably looking maybe at a 3-day inspection period. But for properties that are much bigger, 400 units and more, you're really going to be looking at a longer time frame in terms of getting your physical due diligence done. So during the physical due diligence, there are a variety of licensed professionals that are involved with the whole process, right? So you will have your roofers, you'll have your plumbers, you'll have your electricians, you'll have your mechanical engineers, etc., that kind of come out, and they are going to be at the property during the time that's scheduled for those inspections, those 3 to 5 days, and they're going to pretty much be checking out the structural integrity of the property to see what it offers, right? So typically, they're spread out over the whole property, and then this intense inspection goes on in terms of the structural integrity of the property. The goal of the physical inspection is really to find or to uncover any defects of the property, right? So we're not necessarily going there to look at the beauty of the property necessarily. We want to find what is wrong with the property. For example, in one of our due diligence earlier this year on the 236 unit that we did down in the Atlanta MSA, that was a Park Valley apartment that we closed earlier this year. Well over 30 different vendors were at the property on site at the same time, right? So you have people in different directions doing different things. You may have more than one vendor that's actually called out for the same thing. For example, you may have more than one vendor checking out the plumbing, because not only are they checking out the plumbing, but sometimes you get an estimate from these vendors in terms of what it will take to correct the issue if there's anything that's found, right? So that way you get an opportunity to get in there, and they can get bids from different individuals from the due diligence inspection, and then you can make a choice in terms of the direction that you want to go. So the physical inspection is to determine the structural integrity of the property, right? Are there any foundations in the building that is in bad condition? You want to make sure that you check that out. For example, The one that we did down there, like again in the Port Valley, we didn't necessarily have foundational issues, but what one of the findings was that, there was some type of moisture that was under a few of the buildings, right? So we had to get somebody come in there professionally and kind of handle that in terms of whatever they had to, whatever way they went about it, correcting that issue. So, we just didn't want to have moisture going into the house because houses continuously, because that will cause, they were saying, deterioration of the structure. So we had to make sure that that was corrected, so to speak. So it was good that we did inspections like that, because we'll be owning this asset for another couple of years, and certainly want to make sure the property is in the most habitable condition possible. You also want to check how much life is left on the roof, right? So in the physical due diligence, you'll check the foundation, you'll check how much life is left on the roof. Typically, these roofs, can last anywhere from 15 to maybe 20, 25 years, right? But are these flat roofs, or are these pitch roofs, right? Different roof just have different lifetime on it. And so we want to make sure that those are checked out, right? If you are buying a property where the roofing has been on it, pitch roof, shingles been on it for 15, 18 years, then you want to make sure that you budget for this type of a thing in your underwriting as well, right? So if the seller's not going to compensate for that, or it is already accounted for in terms of the pricing that you get for the property, then you want to make sure that your business plan is so structured that it has the finances that will take care of those roofs once you take over, and is a part of your business plan. You also want to check out the type of electrical wiring that's on the property, right? Some property, the type of wiring you want is mostly copper wiring, right? Copper is the best type of wiring that you will have at these properties, but sometimes you do have aluminum wiring at these properties. So you want to know that. And why you want to know that is because aluminum wiring will affect your insurance in a negative way. Insurance company don't really like the aluminum wiring, and so it will probably increase the amount of insurance that you have to pay on the property. So these are just things that you have to know. And if you can mitigate these type of things, at least you make sure that you account for it in your financing, and so that you can make sure that you're not surprised at the end of the day in terms of an additional expenses. So you also want to check on deferred maintenance. Not all sellers keep their property up, unfortunately, right? And so, if there are deferred maintenance on the property during that due diligence, that physical due diligence, those type of things will be determined, right? Each and every unit of the property will be checked out. So you will have your property management team and their crew that will go through every single unit of the property and check it out, and kind of take note and pictures and just about everything, because you, as the buyer of the property, will get a report at the end of the day in terms of what and where these defects are, and an associated cost with it, right? So all deferred maintenance will be accounted for. So the physical inspection, you're going to be inspecting the walls, you inspect the drainage system, you're going to see if there's any ADA compliance, if there's any elevators that have issues or problem, or there are any code violations. All these different things will be accounted for during the physical inspection of the property. So also under the physical due diligence of the property, I also make reference of what's called environmental due diligence. Now, your main three due diligence areas are the physical due diligence, the financial due diligence, and the legal. But environmental I would put on the physical, because it's also affect the physical environment or surroundings. So the environmental due diligence, the buyer will do what's called an environmental phase 1, or an ESA, which is an environmental site assessment of the property. So you can do a new one, or you can also update an existing environmental site assessment, right? So lenders will require this ESA, right? So of course, your lender is your biggest partner in the deal. You want to make sure you're in compliance with the things that they're asking for, right? So with the ESA, this will check on if there's any hazardous material that may have affected the soil or affected the building of the property in any way, shape, or form, right? So, there are some places, where, for example, there may be a gas station or old gas station that was close by, right? And sometimes there's seepage and leakage and stuff like that if the property is close to a gas station. So you will have the ESA report that will kind of give you some ideas into that. So that's a very important part of the physical inspection as well. Now, the financial due diligence, right? Let's talk about that for a minute here. This part of the due diligence has to do with, of course, the property financial statements, right? So this involves a deep dive into the property's financial records, including the rent rolls, the income statements, the expense reports, and the tax documents, right? So the goal here is to ensure that the property's financial performance just matches the seller's claim, right, and meet your investors' expectations, right? So it's very important that the buyer understands the income and the operating expenses and the cash receipts associated with the property. And financial due diligence will help to remove, the emotion of the whole buying process, really, and really help the buyer to kind of determine if the property is a good investment. Sometimes we get out there as investors and we see these properties, aesthetically, they look great. And so, maybe by the water, may have everything going for it from a looks standpoint. I remember us doing one earlier this year in Florida. It was a beautiful property. It's still a beautiful property, right? And, you can get caught up in the beauty of the property, but overall, what's important is that the financial due diligence can help you to, separate the emotions from the actual numbers of the property. When you're talking about the financial due diligence, you're actually talking about the numbers of the property, because when it's all said and done, it's a numbers game. You're not going to get any type of great returns just from the beauty of a property. You're going to get returns based on the financials that is on the property and that it makes sense for you and your investors. Financial due diligence really help you to keep an even keel, and so you can work from the numbers standpoint. You got to trust the numbers, and of course the numbers won't lie to you. So when you're buying multifamily properties, you're in fact buying a business, right? We should be very aware of that. And the question is, based on the numbers from the financial due diligence, you got to ask yourself, am I buying an asset here or am I buying a liability, right? Because believe me, a beautiful property can also be a liability. I mean, I think it's Kiyosaki who said, an asset is something that put money into your pocket. A liability is something that takes money out of your pocket. So even if that property is nice and pretty, 200 unit complex, if it is not putting money in your pocket at the end of the day, it is a liability, right? So you want to make sure that you go through your financial due diligence to determine what are you buying here. Because will you be able to meet the returns metrics projected by your investors? When it's all said and done, you have two big investors on your side. One is the bank or the agency that's funding the senior debt. And then the second portion of it are your common equity, right? Those guys that you're raising money from in order to close out this deal, right? So those are the two folks that you got to make sure you can satisfy on a monthly basis. If you have, of course, you got to pay the bank. The bank is a senior debt, so they're first in line in terms of getting payments. But you also want to try to meet the projections that you've projected for your investors, and especially if you want to invest with them over and over and over again, right? So you want to make sure that the finances check out. So for the financial due diligence, verify how the property is currently performing, right? So you want to check out the current cash flow on the property. You want to check out any existing vendor contracts that may be on the property. Some of those contracts you may want to renegotiate, right? You may have a bulk contract on the property for cable or something like that. If it's not serving you in terms of bringing in additional income, you may want to renegotiate that, right? So just check out the current contracts that you have and see if it is helping you to increase your NOI, your net operating income, right? You may have to do a lease audit, right? You want to make sure you check out the rent rolls during your financial due diligence. Of course, you want to audit the historical expenses, like the real estate taxes and the insurance, because as we know, those are two of the biggest operating expenses that we have in the multifamily when we're looking at properties. So you want to make sure that you do your financial due diligence. Bottom line is you're buying a business. You want to make sure that the numbers work for you and that you will kind of bring the return in to your investors that you hope to bring them at the end of the day. The legal due diligence, we'll also touch on that. First question to ask is, does the seller has the right to sell this property, right? The legal due diligence will involve review of all aspects associated with the property, right? It includes examining the leases, the zoning regulations, and the title documents and the easements, and just any pending legal issues. Property will fall under the legal due diligence. So the legal due diligence ensures that the property can be used for its intended purpose, right? Typically, you want to have a property used for its highest and best use. So you want to make sure that you do your legal due diligence there, because it will ensure that the property is used and that there's no hidden liabilities associated with the property, right? So the legal due diligence, needless to say, it is super important. So you want to ensure that your title company does an adequate research on the property on your behalf, because you as a buyer, you want to make sure that the property is transferred to you using a general warranty deed, right? This type of property, you do not want to take the chance of doing a quit claim deed on these properties, right? The property should be void of any encumbrances, like any liens, any type of easements, any type of encroachments, anything that diminishes the value of the property. You want to make sure that those are taken care of, because as a buyer, you need to receive marketable title from the seller. And if there's anything that's, not allowing that to happen, then that need to be cured before that is transferred over to you as the purchaser, if you're the purchaser in this transaction, right? So again, of course, this is super important, the legal due diligence part of it. You want to make sure that you receive marketable title for your transaction, right? Because one, your financing institution, which is a bank or agencies, right? Either Fannie Mae or Freddie Mac, the deal, your biggest partner in the deal, really. And they will not finance this deal if it doesn't have clean and marketable title. That's going to, they'll just absolutely not fund this deal. So remember, it is a seller's responsibility to correct any defects on the title before they actually make the transfer of the title, right? So the legal issues will put the transaction at risk. Maybe if not closing, right? Or it may delay the transaction at the very least. So it's better to have a delayed transaction and make sure that everything is properly addressed and corrected, and that you can be funded versus trying to use a quick claim deed or something like that to bypass having good legal title. So overall, the legal due diligence will include just a reviewing of the title and the zoning compliance, and just to make sure that you have the right boundary survey on your property, so that it will serve both you, your investors, and everybody involved in the transaction well. So finally, the due diligence is just a thorough examination of the property, but it is crucial for your investors, for the buyers, for the lenders, just because it helps mitigate any type of risk and just uncover any potential issues and ensure that the property, aligns with the investment goals that you have in line. So that's where I'm going to kind of leave it for today in terms of the due diligence for multifamily real estate. We'll have another topic next week for you guys to go over. And if you have any questions, guys, you can always reach out to us outside of this. We're here to support what you're doing in the multifamily space as well. I think, this is a relationship business, and we've developed good relationship with many of you guys. Many of you guys have invested in our deals. We just completed another deal, which is the Archway apartment complex. We actually went to closing on this deal, but we're still doing a little bit of raise on the back end for it. So got a few more slots left to be filled. So it's a beautiful 106 unit apartment complex in the Atlanta MSA. It's close to the one that we did early this year, which is a 236 unit apartment complex. And this one, still have great opportunity to involve you. The returns on it, speaks for themselves. One of the big things that we had liked about this asset is that it has such a great interest rate, because you see it has a blended interest rate of 3.79%. And that is just phenomenal. You can't get that in this market space right now. Good return on investment. And so, if you're interested in joining us, we still have a few slots, like we said. Just give you a good projection in terms of you investing $100,000, then, you can see your return here. Average annual return right now is about 18.51%. The IRR is 15.55. So average cash and cash is about 7.34 right now. So you invest 100K, you're getting back 192K at 573. So great investment in case you want to consider that. I would be glad to talk with you about that some more and, to have you a part of this deal as well. All right. So, next week, you want to register for next week webinar, you can just go to the registration link here. You can just scan the QR code there. And again, I want to respect your times, but if you want to come to next week's session, tell somebody about it as well so that they can also get this information. We appreciate your constant support of Cash Flow Champs, and we look forward to see you next week. Have a great day.